Holy moly, guys. Palantir's numbers are out, and their stock, let me tell you, is moving all over the place. We have a lot to break down in this video. We're going to go over the numbers, the charts. We'll break down the key levels that I'm looking at, and of course, a bunch of financials. So if you all find value, hit the like button. Make sure to subscribe. We're almost at 30K, guys. And don't forget to get up to 16 stocks from Moomoo, the sponsor of today's video, by using that link down below. We'll talk more about that later. Check out the details. And with that being said, guys, cheers. Let's dive into it. So look at Palantir stock right now, guys. Currently it's 4:45. I think the earnings call is in about 15 minutes, so I'm gonna wrap this up and hopefully get in there in time for the earnings call. I should be done in about 13 minutes. That should be fine. And you can see when the numbers initially came out, the stock went from 1810 all the way down to 1575, guys. That was a drop of around 13%. And look at that, guys. It ended up V-shaped recovering all the way from 1575. Now we're in the green. We're actually up around 2.5% here after the bell. Now we're at 1825 roughly, and we close at 1799. So maybe not 2.5%, more like 2%. But either way, we're green after the bell, after dumping, which to me, that is a very good sign, at least for now. We'll see what happens during the earnings call. This could go over 20 for all we know, or it could go back to 15. It could go either way, guys. We know that, especially with a stock like Palantir. So let me pull this up and see what they ended up reporting. I'll read it to you guys, then we'll hop over to the the actual report with some other numbers, financials, all that good stuff. So they ended up doing, it looks like EPS, let me see here, guys, of 5 cents, which came in line with the expectations. Not bad. And they beat revenue. Actually, no, they missed revenue here based on what I'm what I'm seeing on ThinkOrSwim. They did $533.32 million of revenue versus the $538.88 million. So they beat or came in line EPS, and they missed on revenue. And when it comes to revenue guidance, they see Q3 revenue of 553 to 557 versus the 552.09 expected. So that's good. That's above the estimates for Q3. And it looks like they raised their full year 23 revenue guidance to over 2.21 billion, which is pretty much right in line with the estimate there, which is pretty solid, not too shabby if you ask me. And it looks like the board authorized a stock repurchase program of up to $1 billion of outstanding Class A common stock. So they're looking to buy more of their stock. That's a pretty good sign, especially if you actually own the stock. So yeah, not bad. I mean, the fact that they missed on revenue, I guess that is a little bit bad, but it wasn't that crazy. They barely missed. You might as well just say it came in line with the expectation. So not a crazy quarter, I guess you can say, on EPS and revenue. Pretty much right in line with the estimates, but when it comes to guidance, pretty good, I'd say. Not too bad. And you can see here we are now up to $18.30. And on the 20-day chart, we're still holding the trend that we talked about earlier. And you guys can see here on the 4-hour chart, we're still above the 180 SMA, which, funny enough, with that dump that we saw initially, we got under the 180 SMA on the 4-hour. We got down to 1550. The 180 SMA is at 1650, but now we've recovered over that. As now, again, we're over 1830 after the bell, at least as of now, as the earnings call is projected to start in 10 minutes from right now when I'm making this video. And of course, when you're watching this, the stock's probably gone up a bunch more or down a bunch more after the earnings call. But right now when I'm making the video, the earnings call has not yet occurred. I'm filming this literally when the earnings, the actual the initial release came out, right? So let me pop up the Chrome app here, Google Chrome. There we go, guys. And let's talk about what's going on here with these numbers and see how they compare year over year, quarter over quarter, all that good stuff. Let me make my big old head a little bit smaller, guys. There we go. So we can actually see the numbers here, what's important, right? So GAAP net income of $28 million. You guys can see that right up here. Third consecutive quarter of GAAP profitability, which is great. That's what caused the stock to go ballistic in the last quarter. You guys probably remember that, right? And GAAP income from operations came in at $10 million, representing a margin or a 2% margin, and that's the second consecutive quarter of GAAP operating profitability. That brings GAAP earnings per share of 1 cent, or at 1 cent. Not bad. Adjusted EPS of 5 cents, with revenue growing at 13% year over year to $533 million, which we talked about a couple minutes ago. And look at this, folks. Commercial revenue grew 10% year over year to $232 million, as U.S. commercial revenue grew 20% year over year to $103 million, which is pretty good, as government revenue grew 15%, which is that a little bit less than what it was in the last quarter? I forget. But 15% year over year to $302 million, as international government rev grew 31% year over year to $76 million. And look at this, guys. Customer count grew 38% year over year and 8% quarter over quarter. U.S. commercial customer count increased 35% year over year, from 119 customers in Q2 last year to 161 customers, you guys can see right here, in Q2 of 2023. Really good if you ask me, guys, really good. And adjusted income from operations came in at $135 million, representing a margin of 25%. Cash from operations of $90 million, representing a 17% margin. Adjusted free cash flow of $96 million, representing an 18% margin. And cash equivalents, and short-term U.S. Treasury securities of $3.1 billion, guys. So they have a big cash position. And I think if we go down a little bit more, we will see their updated balance sheet, which honestly, let's just dive right to that right now. And it looks like H1 2023 highlights. So the first half is what that is, right? Revenue of $1.1 billion, net income of $45 million, representing a 4% margin. Cash from operations, $278 million, representing a 26% margin. Adjusted free cash flow of $285 million, representing a 27% margin. All right, guys, so let me come down here a little bit and see where the balance sheet is. I'm pretty sure I saw this when I initially pulled it up. Here it is, guys. Nope, that is the statement of operations. Let's come down a little bit more. Here we go, guys. This is the condensed consolidated balance sheets, which will show us here what's going on as of June 30th, 2023. So cash and cash equivalents, $1.1 billion, or $1.05 billion pretty much. Let me actually zoom in so you guys can see this. Marketable securities, roughly $2 billion. So that adds up to whatever it was, $3.1 billion. Accounts receivable, $375 million. Prepaid expenses, other current assets, $97 million. And overall, their total assets are roughly $4 billion, guys, with current assets being at, let's see, where's that at? Total current assets, $3.5 billion. Very solid. So let me actually compare that to current liabilities, which, if we come down a little bit more here, guys, current liabilities, are you ready for this? $685 million freaking dollars, guys. So that is a current ratio of well over 1. I mean, their total current assets are $3.5 billion. Total current liabilities, $685 million. Put the 3.5 over the 680, guys. We're talking current ratio of more like a 3 or a 4, whatever the heck that ends up coming out to. Maybe even a 5. I don't know. I don't have my calculator on me. But that's really good. That's really good. Their balance sheet is solid, and that was never in question. But I like looking at it, whenever I look at companies' earnings. I like running through the balance sheets, the income statements, cash flow, all that good stuff. And yeah, that's pretty good, guys. Let me see anything else here that's standing out. Their total current liabilities are comprised of accounts payable, accrued liabilities, deferred revenue, which is roughly $260 million. Accrued liabilities, $185 million. So yeah, guys, pretty solid if you ask me. How long are we in here? About 10 minutes. So yeah, let's go back to the charts now and see any other movement, as now we're 4 minutes away from the actual earnings call, which I guarantee that'll move the stock. I mean, you guys know that it's going to go crazy once we get more info out of the earnings call. We get the Q&A, all that good stuff. So right now, Palantir is actually losing a little steam heading into the earnings call. It peaked at about 1845. That was roughly 10 minutes ago. Now we're down 23 cents from that point. We're down about 1.3%. So let's see, man. Is this going to rip back over the mid-18s. If so, that could be a huge breakout spot for the bulls. But let's be honest, we're not seeing any sign of that, at least as of now. What do you guys think? And of course, let me know in the comments how it's doing when you're watching this video, because when you are watching the video, earnings call will be out. This will be moving even more. So what do you guys think? Let me know your thoughts in the comments. Hit the like button. Make sure to subscribe. We're almost at 30,000 subs, guys. And don't forget to get up to 16 stocks for Moo. Use that link down below. Open up your account and fund it with at least $100. You get 5 stocks right off the bat. And fund it with at least $1,000. Listen to this, guys. You get another 10 stocks on top of the 5 stocks, totaling 15 stocks. And listen to this, guys. Even better. Fund your account at least $5,000. On top of those 15 stocks, you also get a free share of either Tesla stock or Expedia stock for a limited time, guys. So get on it. Link down below. And of course, that is an affiliate link. It helps the channel. I appreciate you guys as always. And with that being said, cheers. I'll see you in the next one.